Coming up in today's show, the stock market stages a broad rally higher on the back of a cooling jobs market and lower consumer confidence. I go over sentiment charts and other economic indicators. NVDA closes at a record high, Bitcoin rallies after a key court ruling, and the $200 billion meme stock. Hey, what's up everybody? Hope you're doing well. My name's Jared and you're now tuned in to the Click Capital Daily Market Show. I'm going to run over the most important news, data and charts for you today to let you know exactly what's happened in the markets and where the opportunities may lie. And it was a pretty bullish Tuesday on Wall Street. Every sector finishing in the green, with big rallies coming from mega cap tech leading the way. We had NVIDIA up over 4% and Tesla up over 7%, so stick with me, I'll go into the charts later on and perform some technical analysis to see whether this bounce is for real or is this just a pullback in the bearish trend downwards. So we got some economic data out today, and one piece we saw was the US labor market showing signs of losing steam in the JOLTs job openings, with them dropping to the lowest level in nearly 2.5 years and coming in at 8.8 million versus the 9.46 million that we had expected. We also got a little bit of a dip in the consumer confidence, with the index falling to 106, down from 114 in July and below the 116 we expected. And that could be a result of the recent higher gas prices. And those pieces of data materially altered the chances that the Fed will do another hike by November. It was just yesterday that the market was pricing in an over 61% chance that the Fed would have hiked by November. However, we're now back to the probabilities that the Fed will hold and not do any other hikes by 52%. So we got a bit of a repricing in the bond market, with the 2-year government bond yield falling a bit today. It was only yesterday we're at 5.10. We're now at 4.89%, and we can also see that in the Fed Fund Futures December contract. Again, yesterday we're at 5.50, today we're at 5.45, and that's what really helped the stock market get excited today, pushing the SP500 just below 4,500 and reclaiming its 50-day VWAP. Same deal on the Nasdaq, now above its 50-day. However, looking at the equal weight S&P 500 and the Nasdaq equal weight, they are still below their 50 days, along with the Dow, mid caps, small caps, and especially micro caps. So most stocks are still a bit weak here. We just saw some really good moves in mega cap tech today, which helped those concentrated indices, Nasdaq and SP500, move a bit higher. However, we'll keep going through today's news and we'll come back and dig a bit under the hood to see what's going on across all sectors and markets out there and see what we can make of this move today. We also saw HSBC come out today and say now is a great time to load up on US stocks and other risk assets as US exceptionalism is increasingly making a comeback. They pointed to US GDP growth expectations are continually being revised higher. Europe's are not. They said leading indicators are pointing to a deeper contraction in Europe, whereas US manufacturing might turn the corner soon, and that Eurozone headline inflation should drop to almost 2.5% in Q4, while US economists expect it to increase. They said all that leaves them to favour US stocks over European stocks, and they could be right. It could be a buy the dip opportunity, as August has been the weakest month this year, and we have seen that dip across sentiment readings as well. We can see here in the AAPL Investor Sentiment Survey, after recently reaching highs not seen since late 21, we've now dipped back down from above 50 to currently 32.27. An even more sharper contraction in a similar sentiment survey of active fund managers, the name exposure index, dipping down to 34.36. And the most popular sentiment indicator out there, the CNN Fear and Greed Index, after being super elevated for a long time, pretty much spending all of May, June and July above 60 and 70, that had finally dipped and currently at 46.7. In my own custom sentiment indicator, the S&P 500 oscillator for TradingView, that got down to 35 on the 18th of August, and we've had a bit of a bounce and now back at 53.7, a little bit above the neutral zone. And so overall markets are still looking pretty healthy here. We can see that in the Financial Stress Index, which is composed of variables from 5 categories: credit, equity valuation, funding, safe assets, and volatility. You can see that spike there in COVID, and that's currently been trending down all year after a brief spike in March. It's currently in negative levels at 0.54 points below zero, which means things are pretty calm out there. We can see a similar story in credit spreads, and that's in the difference in yield between junk bonds rated CCC versus the US government 10-year bond yield. We can see back in COVID, junk bonds spiked to 18 percentage points above the US 10-year, and currently we're just sitting at 9.41. And another thing that may surprise you is sales of heavyweight trucks, which can be a leading economic indicator, as companies that are purchasing trucks to move goods around the economy are foreseeing a growth in their business and category. And that's actually been trending up this year. And just zooming out to a 40-year chart, we can see July numbers came in at 580,000 sales, which is actually the largest reading ever. And finally, just looking at the VIX weekly chart here, currently at 14.4, and just zooming out we can see that is very low and the markets are really calm. And same in realized volatility as well, currently tracking at 12.65% annualized movement. So even though we've had a bit of seasonal weakness in the stock market this month, things are still really calm and it looks like we're in a slow grinding summer mode. Also helping the stock market get excited today, in addition to the prospect that the Fed may be done, was news out that NVDA is partnering with Google that will involve its technology being sold through Google's cloud, which is a pretty good move for NVIDIA, as Google has much more reach to the consumer, much more network effects, and obviously NVIDIA is stronger in AI and chips than Google, so it makes sense for the two to partner. As right now, there's still currently a race amongst mega cap tech who is going to be the leader in AI, not only in just making the chips, but in offering the end product for consumers as well. That news caused NVIDIA to close at an all-time record high, currently with a market cap of 1.2 trillion. And since we recently just got that blowout quarter from NVIDIA, beating EPS estimates by almost 30%, analysts have revised their earnings expectations going forward, which has led NVIDIA's forward PE ratio to drop to the lowest level since late last year. And if analysts are right on their earnings expectations, NVIDIA's forward PE of 33 isn't that crazy now considering their growth. And they are still about a year or so ahead of the competition, but they do have a lot of competition coming for them. But partnering with a big company, one of the biggest in the world like Alphabet, will certainly help them stay out in the lead for a while. And just looking at that price action in NVIDIA, after we did that huge gap up after earnings and closed on the low, it's managed to hold above its 50-day. Looks like it's been dip bought. Pretty strong day here, up over 4% on above average volume. And there's no reason to think that this can't close above $500 a share for the first time this week. And considering that blowout quarter on the top and bottom lines, all it needs is a bit of positive sentiment and this could continue rallying into the 500s. And the market liked that news for Alphabet as well, with its shares reaching new all-time highs this year on above average volume. And don't rule out Tesla's potential in the AI space either. They have big ambitions to be a player in artificial intelligence. They're actually buying thousands of NVIDIA GPUs and plan on to have one of the most powerful supercomputers in the world, and they'll continue to make significant investments in this space as they're going to lead the industry with self-driving and robo-taxis, be one of the biggest data collectors in the world, and that will further play out into their home clean energy products as well. And just looking at the charts, Tesla reclaimed its 50-day VWAP today, up 7% on above average volume. And Tesla's just one of those stocks, once it gets going, you don't want to short it because it can just rip higher really fast. We may see some excitement start to build for the world's biggest stock as well, with Apple going to announce the launch of their new iPhone 15 in 2 weeks on September 12. You can watch the launch event being live streamed on their website, and that stock too put in a good performance today, up over 2%. Another news out today, Gary Gensler's SEC took another blow in their war against crypto, with a court siding with Grayscale over its lawsuit against the SEC, in which the SEC had denied Grayscale permission to convert its popular Bitcoin trust into an ETF. And I'd say that's got to do with BlackRock, Fidelity, and others trying to get into the Bitcoin space when Grayscale's been trying to do that for years now and always hit the SEC wall and trying to do it. And that's got to do with their flagship Grayscale Bitcoin trust. It goes under the ticker GBTC, which has actually been on the market for over 5 years now. They were kind of the pioneer in this space for bringing Bitcoin to the stock market. However, because of the way it's structured, it can't mirror the price of Bitcoin as well. It has a lot of lag effects into it, but that did really well today, up over 16%. In addition to the price of Bitcoin itself, up over 6%, briefly reaching above 28,000 a coin. And that also helped other players in the space like Coinbase, which was up almost 15% today on above average volume. And finally, in news out today, we've got meme stock VinFast, which is a Vietnamese electric vehicle maker, has been on a crazy run lately. Actually, he's got over to 200 billion in market cap, which has also attracted the eye of veteran short sellers like Jim Chanos, calling it the $200 billion meme stock. And he's right, it is crazy because they've only delivered just 11,300 vehicles in the first half of this year. So it definitely doesn't deserve to be the third most valuable automaker in the world. And just look at that chart. Whoever's been able to manipulate that stock did a pretty great job, because at the start of the month, we're trading around $10 a share. Yesterday, got a bit above $90 a share. However, it looks like we've had a big sell-off today, down over 43%, and still just at an absolutely crazy valuation of over 100 billion market cap. So this thing should be back down at $10 a share. However, who knows what could happen? This could still be very volatile going forward. And these moves and valuation just shows that the stock market can still be quite the casino for these smaller stocks and those that are able to manipulate them. Got the fear and greed index smack bang in the middle at 50 in the neutral zone. Pretty busy day in the options market. Traders getting excited again, coming in just below 40 million contracts changing hands, with 53% of them calls. However, contrasting that was dark pool traders actually showing the least amount of enthusiasm for a couple of months since July, with the dark pool index falling to 45%, and the gap closing between corporate insiders buying their stock here in the blue line and selling their stock here in the red line. Okay, back into the charts. We had a good move today from Canada's TSX. It also reclaimed its 50-day. FTSE almost there. Same with Germany's DAX. China 50 on a big inside day. Japan's Nikkei back into a short-term uptrend. And the Aussie 200 almost there. You can see those put-call ratios start to drop again. And a big move up in short-term breadth. Now 52% of stocks above their 20-day average. However, still got more than half of stocks below their medium-term 50-day average. And we didn't see that big a move in stocks making new highs. Only 56 on the NYSE and 41 on the Nasdaq, just slightly outpacing the amount of stocks making new lows at 32. Strong moves up in mega cap tech did help the growth versus defensive sector spread. Same with high beta stocks and growth stocks versus value, putting in a good move today. There's a look at the commodity growth spread. Copper versus gold tracking sideways. And there's a look at those credit spreads. High yield bonds still performing well against treasuries. And the 10-year coming off today down to 4.12%, which helped bond prices move higher. Also helping the move today in risk assets was the dollar index coming off a little bit, and commodities still trading strong here. With a pretty good move up in gold today, also reclaiming its 50-day. Same with crude, really strong. Over to stock sectors, all of them finished higher, especially the growth stuff. Got meme stocks up 4.2%, AI bots up 1.8%, semis up 2.5%, highly valued stocks and ARC up 5.4%. Nice bounce here in clean energy up 3.7%, and some big moves up in the winning sectors this year. Home builders and industrials both just hovering below their 50 days, and even the defensive sectors put in a good day. Healthcare, staples, and utilities both up a little bit. There's BlackRock also having a bounce, and overall in the meme space, pretty good moves up. Big Bear up 17.5%. Carvana still trading strong. All the EV makers had a good day except NIO. Active today was Big Lots coming in with earnings above expectations, up 26%. Same deal with Best Buy beating on top and bottom lines. Market liked that. We had some analyst upgrades on AT&T and Verizon, with research showing that they can still hold their high dividend yields, and a little bit of a bounce in the regionals and big banks as well. Okay, so final thoughts on the day. Pretty good bullish move up with a lot of breadth across the market, all sectors higher. A significant move down in yields and repricing on the Fed Fund futures, with the market now given a slight probability that the Fed is done. It's kind of interesting to watch it go back and forth. Still too early to say whether the Fed is definitely done, and I'd say the market will be really looking to non-farm payrolls out this Friday for further confirmation that the jobs market may be cooling. And it's kind of a funny logic, isn't it? With the jobs market getting weaker, that's getting the stock market excited, because if inflation's coming down, the jobs market's getting a little bit weaker, then the Fed should be done, and the stock market's really liking the idea that they can see the end of the rapid rise in interest rates. And with things like NVDA and their growing earnings in AI, that's a great optimistic story to hang on to and keep going higher. So we still have most stocks underneath their 50-day VWAP, but we got the big NASDAQ and SP500 indices back above, and they look like they may have completed a short-term pullback. However, to say we're most likely to go into a period of consolidation for a few months before potentially setting up for a Santa Claus rally. And that's all for today. Thanks very much for tuning in. Hope to see you again tomorrow. Cheers.